Hey everybody, and welcome to another episode of Time, Talent, Treasure Radio. I'm your host, Jared Sebesta of Taatjes Financial Group, where we build purposeful retirement plans. At Taatjes Financial Group, we believe retirement planning is so much more than just preparing financially. Our goal is to help retirees and pre-retirees steward their time, talent, and treasure. We have the tools and proven process to make sure your retirement plan delivers the greatest purpose, impact, and legacy. If you need help building a purposeful retirement plan specific for your life and your retirement, give us a call. Our number is 320-222-4236. You can request a meeting online at taatjesfinancial.com. And if you live in West Central Minnesota, just stop by our office. We're located on 19th Avenue Southwest in Wilmer, building purposeful retirement plans. Well, thank you so much for joining us here today. If you missed last week's show, we had a really interesting conversation. We talked about the cruelty of math and the importance of a proper risk profile. Ben Taatjes kind of broke down these two facets of your portfolio and really talked about the importance of really managing risk and how math, again, can be very cruel, especially in down markets. If you missed that show, go back and check it out. And I've been reminding you each and every show that we're on a number of platforms, including iTunes. If you're into podcasting, search Time, Talent, Treasure Radio there. Again, you can find all of our shows archived on our website, taatjesfinancial.com. And we're also on YouTube. So if you're on YouTube, find our channel, search Taatjes Financial, subscribe while you're there, and you'll see a number of playlists, including this particular show, along with our podcast, Retire Repurposed, as well as all of our online seminars that we've had in the past. They're all on there. So lots of great content, lots of great media. Make sure you go back and find us. Ben Taatjes joins me on the show here today, and again, kind of continuing this conversation from last week, talking about volatile markets, sometimes when markets are down, and that's kind of what we've seen here in the last week or so. Yeah, last week, we started our show on Tuesday, kind of talking about what the markets were doing, and things had looked a little negative that week. And yeah, the week did turn out as a negative week last week for the markets. And going back to that math we talked about last week, it is math. I mean, when you look at investing, math can be kind of cruel. When you lose money, you will need a larger rate of return to dig out of that hole. Mm-hmm. And I use the math of the 50-100 principle. I've called it before, and that's, hey, if you lose 50% of your investment in some investment, you need 100% rate of return to get you back just to where you were. Mm-hmm. So again, I'm not predicting that. I'm not saying, hey, that's where the markets are heading by any stretch, but I know that math works against you in down markets. Now, another piece of math, Jared, that I think we have to talk about today is how interest rates work. Sure. And people are talking about interest rates all the time now. And the markets last week, kind of looked at that again, and they looked at some economic data and combined that with what interest rates are doing. And I think we got to talk about that. So again, the Fed raised interest rates 0.25% several weeks ago, about a month ago now. The market actually, if I remember right, responded quite positively. You mentioned it had to do with mainly tech stocks, and that was driving it. So what kind of happened maybe last week to see things kind of cool off a bit?
Well, we had lots of other things. I think a lot of people get the narrative on just interest rates, or the narrative on just China, or these narratives come up and they dominate. But I think there's a lot of moving parts. I think the math of interest rates is a big one, and I think talking through kind of how the raising of interest rates has impacted and slowed down the economy is worth noting, because I think a lot of people are like, well, why does it matter? Why if interest rates are higher, because they're trying to slow down the economy, how does that work? And sure. I think, Jared, probably the easiest way to explain it is think about a house payment. And if you're going to go out there and you're going to purchase a home for the first time, and you're going to calculate how much home you can afford, most people are going to look at their payment. And when you look at your payment and interest rates are at 2%, right? Your payment goes about so far. But when you look at that same dollar amount, that same payment amount, and your interest rates are now at 7, let's say, mm-hmm. the amount of that payment that's going towards interest is so much higher, sure. right? You have a lot less of that payment to buy the actual asset. Mm-hmm. So whether or not it be your home, whether it be a vehicle, whether it be a business acquisition, some business growth that you're trying to do, I mean, all of these things play into the value of the asset. The underlying asset is somewhat determined by how easy it is to get money, how low or high interest rates are at a given time.
Yeah, but again, the Fed is doing this. They're trying to kind of, quote, cool off the economy. Do you believe in that mindset that, again, there's kind of ebbs and flows and times where it should go up and times where it needs to kind of cool off? And is that kind of been your experience where this is natural and almost necessary?
Yeah, I mean, the Fed they're in a difficult position. I mean, they're trying to bring inflation down to a target rate, without doing a lot of more rate hikes because they know they don't want to take it too far. Historically, am I a Fed fan or not? I think they play a role. I think many times they get it wrong, but I think right now their goal, and they've said it, is, hey, we got to fight inflation. And I think the hard thing for most consumers, and me included, is like I filled up the other day, and it's not. Oil prices are still fairly high,
yeah.
And groceries, that kind of all got impacted. We're still paying more for just about everything.
Sure.
I mean, I got a blizzard the other day with my daughter. Our total's like
$5.
$9. Yeah, it was like $6.75, and I'm like, what for a blizzard? This is ice cream, but I mean, everything kind of goes into that. And the blizzard was great. We enjoyed it, but it did cost a little bit more. So I think the pain of seeing this inflation to the consumer. And then also now seeing, oh man, things, the market has softened a little bit. I think that's kind of that note that, hey, it could be working a little bit, that we are slowing down the inflation, and that was their goal. But time will tell. This is why, again, we always believe in looking at the total picture, not just even the total portfolio. That's important, but the total person. What are your goals? How much time do you have? And how open to risk are you? These things are very, very important, and you have to know what you have. When times are really great, like we've had the last year, this year's been pretty good. And when things are going good, it's easy to kind of fall asleep at the wheel. You can't do that. You got to understand what you have and exactly what the goal of that money is.
Last week, again, you talked about how people get a little bit forgetful when it comes to bad times, and therefore their risk tolerance gets out of whack. Is this kind of one of those key times where people should maybe reevaluate the risk in their profile? What do you think?
Well, I think every time's a good time. I mean, I don't want to be making quick decisions. Again, I'm trying to remove emotions always from somebody's mind. I mean, we're not investing. I mean, that's a Warren Buffett thing, right? Don't invest emotionally, and don't let greed or fear drive decisions. That's important, and that's great advice. Remove that, but then look at your personal economy. We used to talk about this all the time on the show when things were really bad and the markets were down. But I think now's a great time to look at your personal economy.
Sure.
How are you spending your money? Is there room to be saving more? Could you be, even giving more? There's so many things I think people need to, continually look at. There's a reason, Jared, that the Bible talks about money over 2,000 times. And that's because it's so easy to get caught up with money. Being a steward involves both your giving and your saving, your spending. It looks at all of both the financial and non-financial side of your life. So again, we're all about your time, talent, and treasure when we talk to people. And I think taking accountability of all those things on a regular basis is really, really important.
We've got about a minute left. If people were to come in and meet with us, again, in a time like this, what would be some questions that they would hear from us?
Well, we have to start getting to know the person. One of the questions I love asking people is, what was money like for you growing up as a kid? What things have you tried that worked? What hasn't worked? I mean, there's so many things, but every question we're asking is trying to get at the root, the heart of a person, right? Why they look at things a certain way, and then discover their goals. That's all our meetings look like. And then we come back to them in another meeting later saying, here's what we think. Here's some advice based on what we learned about you.
That sounds good, Ben. Thank you so much. Well, I hope that you take us up on that offer of scheduling that meeting, whether you already have a retirement planner or you do not and need to get started. We can help. Give us a call at 320-222-4236. You can request a meeting online at taatjesfinancial.com. And if you're in the neighborhood, just stop by our office. We're located on 19th Avenue Southwest in Wilmer. Office hours Monday through Friday, 8:30 to 4:30. I'm Jared Sebesta, joining you on this episode of Time, Talent, Treasure Radio. Thank you so much for listening. We'll see you next time.
Securities offered through Avantax Investment Services. Member FINRA SIPC. Investment advisory services offered through Avantax Advisory Services. Insurance services offered through an Avantax affiliated insurance agency.